Hello, and welcome to today's debate, hosted live from Orange County, California. Today we are discussing unsecured finance, also known colloquially as UBF, and personal term loans. The debate is going to be debated today by Tim McCormick, who is representing unsecured finance, and Trey Sublette, who will be representing personal term loans. My name is Rhoda, and I'm going to be the moderator today. The rules to go over, gentlemen. You will have a 3-minute introduction to go over your program and explain why it is wonderful. I then have a series of questions where you will have 2 minutes to answer, and then there will be a 2-minute rebuttal from your opponent. Trey won the coin toss before the debate, and he will start with his opening remarks. Trey, when you are ready, I will start my timer and you can begin.
That's right, folks. I'm a winner. Thank you, Rhoda, and thank you, fellow Americans, for welcoming me into your home. I feel you're probably blessed and so lucky to have my presence in your home. My pledge today is to say what I want to say, not what Tim McCormick wants me to say. That is my promise to you. I am with the Personal Term Loan Party, and that is my product. I believe me, people. Trust me. I know what I'm saying. I am a super genius level, so I am a smart person.
Wrong.
My product, personal term loans, are an amazing solution for a lot of different variables and scenarios. A personal term loan product can be used for real estate investing. It can be used for a business. It can be used for your personal use. So some of the amazing things about it would be it's fast. It's super fast. Probably one of the fastest programs in all of today's landscape. It's also W-2 and income driven, and also credit. So you gotta have credit, gotta have income. If you're comparing this to this man's product, it is much faster. 3 days, 5 days, not 3 weeks. So if you're looking for capital for your real estate investing, flipping opportunities, your startup business, your existing business, and you need it fast, maybe to make payroll, this is an amazing product to explore. All I need is a credit report and proof of income. And within 24 hours, you'll have a super projection of how we can help out. My product has no borders. We don't see colors. We help people who are white, black, green, red, and so on, even Martians. So if you want to be on the winning side, you need to be the personal term loan program. Thank you.
Thank you. Okay, Mr. McCormick, your opening statements.
First of all, big thank you to Orange County for hosting us today. Really appreciate it. And hello, America. I am glad to be here. Another warm thank you. I want to say thank you to all the veterans that we worked with over the years. You guys are amazing. We love getting you guys into businesses. Also, all the franchises we've helped. So many different franchises. It's too many to even name. We appreciate all your support and everything you've done. My name is Tim McCormick. I'm here representing the Unsecured Business Finance program. It is amazing. It's probably the best type of financing ever invented for the people that qualify for it. Basically, anybody who doesn't qualify for it wants it, and we've done an amazing job of making it available for almost everybody, anybody that has good credit. That is one of the best things about our program is, doesn't matter where you are or who you are, if you have good credit, you don't need a job, you don't need an existing business, you don't need an amazing story, you don't need any story at all. We can get you potentially $100,000 in unsecured financing. It's not collateralized by anything. You could use it to buy anything that you can buy with a credit card, which these days is heck just about anything. You can start a franchise, you can buy inventory, you can even pull money out in order to pay payroll. So there's just about no limits to what you can do. The unsecured financing program takes about 3 weeks. We can help you get about $100,000. You can use it for whatever you want, and it won't be sitting there on your credit blocking you next year when you want to go get a home loan. So if you want to go apply for a home loan and you don't want to mention the business credit at all, don't. It's not relevant. It's not necessary. It's not going to interfere with anything you want to do. If you want unsecured financing, if you want to start a business or grow a business, you want financing forever. The unsecured credit program can work for the next 30 years instead of the next 3. Use the credit over and over and over again without any prepayment penalties. Pay it off, use it again. It's just about the best thing there is. Thank you, Madam Officiate.
Thank you.
Kiss off.
Okay. For my
Follow
first
that.
I was
I
talking.
agree with
You
about
can't interrupt
70
me. You can't interrupt me. I'm the moderator. You can't interrupt me. My turn. Tim, we'll start with you on this one. What are the cost of funds?
Okay, great. Thank you for the question. The cost of funds, well, first of all, the first thing I want to think about is what are you going to get from starting or growing your business? How much money you're actually going to make with the money. The cost is really secondary as long as the end goal is what you're going to achieve. If getting the funding is going to help you earn an extra $1 million in revenue next year, then who cares if the cost is 5% or 80%, you know you're going to get there. But there are a few different costs you want to look at. Generally what we're getting with the Unsecured Business Finance program are credit cards. The interest rates on the cards can range anywhere from 6% to 29%. Most of them are averaging around
Holy
14.
crap.
Most of them are averaging around 14%. May sound high, but it's not a loan where you have to make a payment every month. You only use it and pay interest while it's used and then pay it off. Typically your payments are about 2% of whatever you're using. So the interest rate at 14% is only relevant while you're using the funds, and it's something you can use over and over again. And like I said, the real purpose is how much money are you going to make? And if you look at it that way, you'll agree that the cost is negligible. Almost negligible. That one
Okay.
stuck in my mouth.
Thank you. Trey, same question. What are the cost of funds, and any response to Mr. McCormick?
Absolutely. I agree with about 75% of what he said, but 45% is not real correct, in my opinion. So
I love your stats.
there we go. So with personal term loans, the cost of funds would be simply, you're roughly, let's say if you're paying about 2% of the loan amount. So if I've helped someone get a $30,000 personal term loan to help launch their business, roughly their monthly payments will be about $600 to service that debt. But with Mr. McCormick and what he says about return on investment is definitely true. It's all about where you're going to get to. These funds will be used for this that will equate to this as far as success with your real estate endeavors or business endeavors. So as far as cost, you're roughly right around 2% of the loan amount as a monthly term.
Okay, thank you. Just to clarify, though, yours is cash.
Yes. I did have this one mother and her daughter approach me the other day with their 13 closest friends. And they said I was the most amazing person they'd ever seen before. And I agree. I was a yes. And the reason why is cash is king. And personal term loans are cash in hand to use for your endeavors.
Okay.
So thank you, Rhoda.
Thank you. And Mr. Trey, you're the first one on this one now. We
Great.
go back and forth so that then it's fair. Because
And that's how he goes with his policies, back and forth. You can't nail him down. It's insane.
And I'm fair.
Wrong.
Right.
Wrong.
Wrong.
Is this going to report to my personal credit?
Absolutely. Absolutely. It's going to help build your personal credit. So personal term loans will appear on your personal credit report as an installment loan. So that is one of the things we have to make sure our clients understand. So one of the things we have to do when review is debt to income ratio, credit. But the personal term loan product will appear on your report, but more importantly, it's not going to restrict you of what you use it for your business, real estate scenario, or personal funds. But it will report in a report, no getting around that.
Okay. Mr. McCormick, your response. Is this going to report on my personal credit?
Thank you for the question, Rhoda. One of the best things about the Unsecured Finance program is that it will not generally report to your credit depending on your credit criteria. Some people will choose to get some credit lines that do report to their credit, but it's optional. But one of the main things that people love about the Unsecured Business Finance program is that they can get $100,000, sometimes up to $200,000 in funding, and it will never show up on their credit as long as they don't default. And who's going to default, right? You're getting cheap money, you're using it to grow your business. There is no reason that it should show up. You don't want to have a credit hangover when you go to apply for something else. And that is, again, one of the strongest things that everybody loves about this program. One of the side benefits of that is that if you're applying and you don't have that good a credit, but you have a spouse or a parent, somebody wants to help you out, you can apply for the funding under your business with them as the guarantor, and they can help you without having any impact at all, except for maybe some inquiries during the application process. But you can have $100,000 in funding guaranteed by somebody else, and it won't show up on their credit as long as you stay in good standing.
Okay, great. That's great. Very helpful. Now, Mr. McCormick, still with you.
Ready.
What's the
Go.
difference? I had to reset the clock.
Oh, okay.
Yeah, I'm watching the clock as you talk.
America's waiting.
Yeah, what's the difference or advantage to having a loan versus a line or credit card?
Okay, so you want to know the advantage of his program over ours.
Or yours versus his, or a line of credit
okay,
versus
all right.
a credit card.
Well, the answer is pretty clear, and it's there's a big reason why it's better to go with the unsecured lines of credit versus the loan, and that is this is a business asset that you can use for the next 30 years, right? Let's say you get $100,000 in lines of credit. You could use all the money and pay interest on it and then pay it all off, and guess what? It's still there. Next month you want to use it again, you want to buy inventory, pay it off when you sell it, buy inventory, pay it off when you sell it. You can keep using it over and over and over again for as long as your business is open. Alternatively, a loan, you're paying interest on 100% of the money day one, and as you pay it off, the money goes away. That's what amortization is. As you pay off the loan, the money is gone. But the credit lines, it's there forever. So, some people look at this as the investment to get the lines is creating a new asset that they can use for their business for years to come. Some people get unsecured lines of credit just as a fallback. They don't necessarily have an immediate need for it, but they know that if they hit a rough patch next year, they'll have the credit lines, they can use it to pay whatever they need in order to stay in business. It's an excellent business asset.
Okay, I'm going to follow up with that. Explain the difference then between, because you mentioned that this is a credit card, and often people say, I don't want credit cards, I want a line of credit. Can you talk a little bit about that?
Great. Well, every credit card is a line of credit, but not every line of credit is a credit card. The main difference is you actually get a physical card that you can use to go pay for things. With a line of credit that's not a credit card, you only get a checkbook. Now, some people may say, hey, I want the checkbook. I want to be able to write checks for payroll and stuff. But that is maybe a disadvantage of the credit cards over the credit lines. But there are a lot of advantages as well. For example, if you get a big line of credit and the bank decides to turn it off, which happens all the time, you're out of business. You got to pay it back in a couple days. Usually with credit cards, you'll have a few credit cards, and if for some reason the bank shut one down, you have the other ones left. Also, they're less likely to turn them off. So there's a lot of benefits to the credit cards over the credit lines, strictly speaking. But you get the benefit of just walking into a store and using a credit card for whatever you want.
Great, thank you. Mr. Sublette, what would you say is the difference or primary advantage of having a loan versus a line?
Well, thank you. I'm going to go to, oftentimes people for the unsecured business finance program have to have deep credit history. What if you don't have that? What if you don't have the deep credit history, but you have income? This is the possibility of doing a personal term loan. So having a term loan is going to term out, but the benefit is the speed in cash in hand. That's what you have to look at. So what's more important? The type of funding, or have to tailor it to your scenario? So for personal term loans, speed, cash in hand will outweigh the type of payment.
Okay, thank you.
Hope that works.
I think we have
I
a
got
question from
loaded
our
questions over here.
audience. Do we have a question from our audience? Yeah. We're going to take a question from our audience at this time. Trey, you'll be the first to respond.
Fantastic.
Great. Okay.
Shout out to Fearless Frank.
Hi, so I have a ride-sharing company. I actually lease out the vehicles for other people to do the ride-sharing, and I'm looking to add more vehicles to my fleet. I have good credit. I was pre-qualified. I'm trying to determine which program would be better for me and my business. Like I said, I'm just looking to purchase them as quickly and as many as possible.
Purchase a rideshare business.
It's a guy who's been in business for a long time. He wants to buy more cars. He buys cars and he leases them out. Go.
Okay. Yes.
All right, he's looking to buy a rideshare business correctly as
Is that correct?
He already owns the
he owns it, but he needs capital as fast as
He
possible,
wants
correct?
to buy more cars.
My program is the fastest. The personal term loan program is the absolute fastest program out there. This will allow him to have cash in hand to purchase the car or cars he's looking for his business. It doesn't matter if it's a startup or existing. We're not going to look at his revenue. It's all about his income and credit.
Okay. Thank you. Mr. McCormick.
First, I'm going to just sort of segue on what Trey said. If you get a personal term loan, and the answer is going to be the same with credit cards, you don't necessarily want to use it to go out and buy, I don't know, 2 cars. Because if you're looking to buy cars, you can only maybe buy 2 if you get a big $100,000 term, or 3 or 4, I don't know, depending on how expensive the cars are. It's better to use the money, whether you use the personal term loan or the credit cards, for the down payment money and go get leases for the cars. Right? He wants to get as many cars as possible. If you get $100,000 in term loans, or credit cards aren't quite as good because you got to pull the money out and you have liquidation costs. But you want to use the money for the down payments in order to get business leases. You're just going to get a lot more vehicles that way, and I know that's what the client's looking to do. So in order to use the credit cards, I guess the best part about it is you can pull the money out, buy a car, and maybe sell the car off, pay the lines back and use it over and over again. You could be using these credit cards or lines of credit to purchase cars for the next 20 years, so that's great. With a term loan, you would just have a fixed amount, pay it off over a few years, and that's it.
I have a rebuttal. It sounds like you're with 2 parties now, not just the Unsecured Business Finance program, but
I'm just helping you out because
Okay.
I don't know that you heard the question very well, I think.
Okay. So another solution might be a combination of my program, personal term loans for cash fast, for maybe the down payment, and then this guy's program for, longer term. So it'd be a combination of both programs of personal term loans and unsecured business funding for this person.
Either way, you really want an equipment lease for the majority of the car purchase in order to get as many vehicles as possible, I guess is where we're going to.
Okay. We do have a question from Mr. Alio in the chat. It says someone
Chap
has
Alio?
high income and wants a personal term loan. What are some of the common things that would disqualify him for that? I think this question is for
That to
Trey.
me, Madam Officiate?
No, it's
No,
for
this
Mr.
is my program,
Sublette.
please. All right, Frank it is. Frank, okay.
Chap Alio, I think.
So the question is, he has high income.
High income
Okay.
and wants a personal term loan. What would prevent him?
Some of the variables of our underwriters are going to look at credit. Hopefully they have some installment loan history. And then income, great. Hopefully it's W-2. If it's not, it can be 1099, just highly more scrutinized. Hopefully they've been in their current job for at least a minimum of 12 months. Hopefully been in their residence for 12 months, and hopefully don't have a lot of debt. So global debt is a variable. So hopefully very stable, if I can say it, with their job, their residence, and have strong income, good solid credit. If they have all those things, then they can go as high as $300,000.
Sounds like you're getting pretty high on hopium there,
Hope,
Trey.
hope,
I thought
hope.
hope wasn't a
It's
policy.
not a strategy, but when you're working with Frank, it is.
All right, Mr. McCormick, anything you would like to say to that? I'll give you a minute.
Yeah, I mean, the biggest problem you'd have would be if you're moving around a lot, and you probably have the same issue with getting unsecured lines of credit from the bank or credit cards, because when the bank goes to verify who you are applying, they see you moving all over the place. So you're like, who is this guy? So as long as you have some steady history, with good income, you can get lines of credit and the loan. I would strongly recommend getting both. Again, whatever your long-term capital needs, you can use the loan for it, but you don't know what you're going to need a year, 2, 3, 4 from now, so you should get the lines of credit as well at the same time. That's the best thing you could do for your business.
And we should mention, need to have positive credit history. If there's any negative history like mortgage late payments on your credit cards recently, that's going to hinder both programs.
Oh, people don't like when you take money and don't pay them back? It's weird.
Well,
Banks don't like it,
That's
especially
weird.
because these programs are really dependent on your personal credit more than any other program. It's really exclusively dependent on your credit and potentially your income. If you're getting the loans, they have nothing else to look at, so they're going to weigh it more heavily than other programs that are also looking at business revenues or assets that you own.
Okay, great. Do we have another question from the audience? Great, okay.
All right. You want me over here? Okay. Hey, Ma. How's it? Oh, that way. Oh, okay.
Wow.
Hey. So, I have a question. I want to start a business. You're okay, ma'am. You're fine.
I don't want to be in the shot.
Oh
I don't
no,
want to take
you're
away
totally
your glory.
okay. Apparently,
Twat stealing your
the
thunder.
gentleman over on the side, his camera wasn't working, and
Oh.
yeah, it's all right.
Yeah.
But I want to start a business, and I've never done this before, but my great-grandmother, my grandmother, and my grandfather, who was on the USS Detroit, World War II veteran at Pearl Harbor, love you, Grandpa, were in hospice care, and they had a senior care facility they're in. And the people there were great. They were nice, but the facilities weren't that great. So I want to step in and do this on my own. If I wanted to do this, what would be the best kind of financing for me to do a senior care facility in the next year? All right, this way?
I'm back.
This
Here
way?
I am.
Okay,
Yeah.
thank you. Thank you, gentlemen.
Thank you, sir. I didn't catch your name.
I didn't get a name.
That was great.
The name's Phil Phillips.
Phil Phillips. Okay, that was great. So just to paraphrase, he's a startup that wants to buy a hospice and fix it up. Mr. Sublette, I will let
What
you.
went he went first last time.
That was a off the cuff
I'm a
one.
winner,
This is a.
so-
All right, fine. Tim's a crybaby. Go-
My turn.
Mr. McCormick.
All right, well, there's a number of questions that really need to be answered in order to figure out how we can make this work. I'm not sure if you're buying a closed facility or an open facility, or you're looking to buy a franchise and start a new facility. A lot of different things to look at here. Any one of those ways, I think the credit card program is going to be difficult for you because of the capital requirements are going to be probably exceed your ability. You know, I don't think you can start a senior living facility with $100,000. Now, alternatively, there's a lot of home care, senior care franchises. You can pick up as low as $35,000. We have facilitated funding for lots of those. So if that's one of the options you're thinking about, it would be great for the credit card program. Otherwise, you're going to need to come up with other money. Maybe you're going to need to get an SBA loan and use credit card program for your capital contribution. Or maybe you could work out a seller financing scenario with somebody who's selling a senior care facility. The best thing for the credit card programs is to use it for things you can use credit cards for. Purchasing a long-term asset like an existing facility wouldn't be great for the credit card programs because the interest rate is going to be too high. So you probably want a term loan for that, but either way it's going to be tough to hit. I've seen senior care facilities cost $500,000 to purchase or more. That's not necessarily including the working capital. So that's going to be a little bit of a tough fit for us.
Okay, here's your rebuttal. Your response?
If I may step in, my opponent here does not really think I'm that humble of a person. I feel like I'm very humble. I just don't think he understands. So,
Wrong.
At the end of the day, the answer is to do a consultation. And so what we can do is go over the scenario in detail, understand the type of requirements, what he's bringing to the table in starting this business, and then provide feedback if my program, personal term loan, may be the best fit or only fit, or a combination of unsecured business finance, this guy's program, my program, and so on. So a no obligation consultation is the right answer for all Americans.
Okay. This is another question for the credit card program, unsecured finance. Mr. McCormick, this is for you.
All right, let's do
This
this.
is from the audience. Carolyn Johnson says, for credit cards, are they matched to the person's business? Say someone who travels with Delta, would they be able to get frequent flyer miles on their credit card with this program?
Yeah, okay, that's a great question. So every different, a lot of people going into our program are going to end up with anywhere from 3 to 6 different credit cards or credit lines from the bank. And if you're really interested in the perks, I mean, one of the great things about owning a business is that there are a lot of perks in owning a business, especially in the business credit cards. There's great perks that are involved. Sometimes you can get 0% interest for 12, I've seen all the way up to 18 months. There are a lot of specialty cards that have perks for travel, hotel stays, or a lot of other things, almost anything you can imagine, cash back. Some of them you can use the cash back to actually pay off the card or buy gift cards. So there's a lot of great benefits. If you are getting into this program and you are really interested in those benefits, let us know and we can make sure to maximize those. We could talk about the different kinds of benefits that exist, figure out the ones that are going to be the most beneficial for you. So yes, that is definitely something that you can enjoy with our program that you wouldn't get with a personal term loan. Fun, exciting cash back for years.
Okay. Are there origination fees or monthly fees with those, annual fees with those cards, Mr. McCormick?
Another great question. Some of the cards do and some of the cards don't. If you're concerned about having an annual fee or a biannual fee, let us know and we can discuss the different cards with you and figure out which ones are going to be best for you. We provide a customized program where we work directly with you and analyze all your different needs. A lot of clients come to us and say, I don't care about the interest rate, get me as much funding as possible. For those people, we'll maximize the amount of funding they get. Other people say, I really care about the interest rate. I don't want anything beyond whatever percent. And then we'll let them know what the implications are going to be. Or some people say, I want the best benefits. I want the longest 0% interest. Whatever it is that you need will benefit your business. We'll help make sure that you can get it if you're eligible for it.
Okay. And what about yours, Mr. Sublette? Are there origination fees associated with these loans?
I'll quote my opponent here. Some do and some don't. So there are some origination fees with some lenders. What we'll do is we'll customize our program to the needs of the client. So working with our lead underwriters, we'll try to avoid any lenders that have those larger origination fees depending upon the funding goal. So we're going to specialize everything around the client to make sure it's a smooth process.
Okay, great. All right, Mr. Sublette, you're first on this one. My credit is down. And, but I've got a partner. My mom and I are going in 50-50 with the business. Can we work with that?
Take it from me, someone who has amazing credit, the best credit ever across the world. Absolutely. A credit partner option is something that is doable. Now we have to be mindful of it's personal term loans. So if they're willing to do this, it's going to reflect on their personal credit. This is very popular with a spouse. Maybe they're trying to buy a small franchise and the spouse has really strong income to hit where they need to be to buy the franchise. So as long as they're part of the business or have a good strong rapport with the individual, absolutely.
Okay. Mr.
So you're saying you'll be the credit partner, Trey?
Yes.
Because your credit's so amazing?
I helped one struggling female about 3 months ago here in Southern California, the City of Angels, trying to take her gourmet chocolate business to the next level. Her spouse was a sheriff and had good income. We were able to get her a couple personal term loans, or him personal term loans, to get about $80,000 in about 2 weeks' time. So they were able to accomplish their dreams by opening their business.
Great.
That's amazing.
Amazing.
Mr. McCormick?
Yes. All right. So the question is, can you use a credit partner? And the answer for the Unsecured Business Finance program is yes, yes, and more yes. Probably about 1 out of 4 or 1 out of every 3 clients that work with us are using that structure where they bring in a credit partner. It's a partner in the business. It's not some random person they don't know, but it could be anywhere from a parent, a spouse, an actual business partner who's going to be running the business with you. Whoever it is, as long as they know you and trust you enough in order to work with you, you work out some sort of a deal, then we're happy to facilitate it. When we talk to them, we'll make sure that you guys work together. But it's a great solution, and it helps you skip the whole process. If you're repaying your credit, it could take a year sometimes in order to fix everything to get to the point where you can get financing. Think about how much money you're losing by not having funding for a whole year. The credit partner option is amazing, and it's available for just about anybody.
Okay, great. We have another question from the audience. Mr. McCormick, for you. Can you go over the documents needed to get from the client, or just first to get it for initial review and then after they've gone through the initial pre-qualification?
Great. Well, the documentation is extensive. In order to apply for this program, we first need to see a credit report, and that's it. I'm just kidding. And we don't even need all 3 bureaus. You can pretty much go anywhere, Credit Karma or Experian directly. We need a report. The score is less important. We need to see the full body. We need to see how many credit cards you have, how many loans you have, how long have you had them, what's your repayment history. So we need to see everything on your credit report, but that's it. With that, we can give you an answer within 24 hours typically that'll tell you within a real tight range how much funding you're eligible to get. Now, once you've actually qualified for the program, you decide to sign up. You decide an engagement agreement with us, so we make sure you understand all the terms, and we're going to get your business documentation so that when we're applying to the bank, we have all the information on your business. The engagement agreement has all sorts of information that we need to collect. We'll need identification, all the regular kind of stuff that
articles.
Articles of incorporation, that's the business entity stuff, right? So everything about your business entity and everything about identification and being able to know it's you, so the banks know they're giving the money to the right person. And with that, we can go ahead and proceed. Typically, people can move forward within a day or two. And I know my opponent here said it takes 3 weeks, but some of these lines of credit could be available within a week. So it's not always going to take that long.
Okay, great. I forgot to stop my timer on that one. I don't know if I went over.
I think it was over.
He was over.
Is that how long?
I don't know. I forgot to start the timer. Okay, Trey.
Okay. And
For the documentation needed, both for review and then after they've signed the contract.
documentation for the personal term loan program is extensive, just like Tim was saying about the Unsecured Business Finance program. It's a recent credit report that shows all the details and proof of income. So if you're a W-2 individual, need a last pay stub. If you're 1099, then we need last year's personal tax return. That's all we need to do an internal review to give clarity as far as what can happen if we take on as a client. To move forward, we have an engagement agreement. I'm very proud that Tim used the word engagement agreement, so good job, Tim.
We love getting engaged.
There you go. So the engagement agreement, utility bill, front and back of the driver's license of the individual, at least the last 3 days of pay stubs if they're W-2, last 2 years of personal tax returns if they're or 1099. Once that's all completed, we're off and running and usually see results within 2 to 3 days.
Okay, great. We do have another question from the audience. Mr. Sublette, we'll start with you. What happens if you fall behind on payments?
Well,
That's a pregnant
I'm
pause.
really-
Isn't that what they call that?
I'm really going to go towards our consulting that hopefully you're not going to, I'm going to say hope again, you're not going to fall behind your payments. You should not fall behind your payments because the debt servicing is so easy. For the personal term loan program, again, it's only 2% of the loan amount. If you fall behind, it will reflect on your credit report. That's unfortunate, but we do have some relationships we can refer you to. And so, but at the end of the day, due to you're not locked into large monthly payment like larger SBAs or merchant cash advances, things like that, it should be low, but if you do fall behind, the lenders sometimes will work with you to let you catch up.
And I am going to help Mr. Sublette on this one. They've already calculated your income and the debt to ensure that the debt-to-income ratio is low enough that that shouldn't be a problem as well with your current income.
Thank you.
Mr. McCormick, what happens if you fall behind on your credit cards?
Well, the best answer is don't do that. And when you get the funding, you know how much funding you get, and it's a simple calculation, the same as Trey described for the credit lines. It's just 2% of the funding per month. So if you have $100,000 in credit, that's a $2,000 payment per month. While we'll get you as much funding as possible, you want to make sure that it's something you can service. But of course, you may be thinking, who knows what the future may bring. You might end up at the hospital tomorrow with an injury from lawn mowing, which happened to somebody we know recently. So if something happens and you're taken out of commission and you cannot pay the cards, most of the banks, if you contact them, will try to work with you. They want you to be able to repay, and they'll try to work out some sort of payment structure with you. What we've seen is most of the time, if you're communicating with the banks, they'll try to work something out. They may convert the balance you have on the credit cards to a term loan. They may term it out, as it's called. Sometimes they'll require deposit and then a prearranged payment history. So try to do that. Try to avoid a lawsuit. But the reality is, if you don't pay, it will report to your credit and you can get sued by the lenders. That's the same as any other program. When we say the financing is unsecured, it means it's not directly collateralized by your house, but it doesn't mean that they can't sue you. So don't take more money than you can manage.
Mr. McCormick, just to be clear, that 2% is not on the amount of credit, right? It's on
The amount that you're using.
Okay,
Balance.
there we go.
So if you have $100,000 in credit and you're only using $1,000, then your payments are only $20 a month.
cheap.
Cheapity cheap.
Okay. Excellent. Next question, Mr. McCormick, starting with you, sir.
Ready.
I want to start a franchise, and the cost is $75,000 to $100,000. Here's the scenario. Depending on the territory, can you help? Is that a good fit?
Okay, great question. I love this. We've helped so many franchises that's really within our wheelhouse. That's within the funding range we can help. There's a couple parts to that question. The first one is, are you looking for 100% financing, meaning you need every single penny necessary in order to get into that franchise? At that range, maybe, It's going to be tight because that's a lot, and I don't know how much you're actually going to qualify for. A better answer would be you're coming in with some of the cash and we can supplement the rest with the credit cards. It is a lot easier to do that if the franchise will accept payment in the form of a credit card. So that is something to look at. We know all the franchises. We can generally tell you which ones will or will not accept. If they will not accept it, then in order to get $100,000 in cash in order to purchase this, you're going to need to be able to get more credit because you're not going to be able to liquidate all the cash, and that starts to become a real tough hurdle. But yeah, that's is definitely something you could potentially do depending on the parameters that I mentioned.
Okay, Mr. Sublette, your response.
Sure, absolutely. I would say we can work well together, the personal term loan party and unsecured business finance party. I think it's right in our wheelhouse. If someone needs 70, 80,000, first and foremost, Tim is right. What do you bring to the table? Let's be that other piece. But with the personal term loan program, remember, you can be utilizing the person you're talking to in their income or their spouse or anybody else within their family. So it's easily pieced together to hit that number.
Okay. We have another question from Gary Trump. It says,
boy.
Have you had anyone, we'll start with you, Mr. Sublette, have you had anyone not get funding that was pre-qualified, and what are some common reasons that people are unable to secure funding after a pre-qualification?
Sure, absolutely, Mr. Trump. Okay. After pre-qualifying someone for the personal term loan program, after submitting everything for fulfillment, things that could make it go sideways were they quit their job, or they haven't paid their mortgage, or anything derogatory that hits their credit. Maybe they recently moved and didn't convey that information. Maybe they started a new job and didn't convey that information. So those are things that would derail things. But as a consultant, we're going to be very thorough. But overall, my answer would be if they've dinged their credit, or if they lied about their income, or if they recently started a new job, or just quit their job.
Okay. And then Mr. McCormick, your response?
Things that I've seen beyond what Mr. Sublette mentioned that have hindered people after they come into the program. One of the main ones I've seen happen a few times was that they had a bankruptcy in the past that they didn't disclose to us. So they had actually defaulted on financing with the lenders that we were going to take them to. That doesn't help. I've seen some people who had already established financing for another business with the same lenders we were going to take them to, and they didn't disclose that to us. Those are a couple reasons why people haven't gotten funding. Another thing I've seen is where there's partners in the business, and after we begin the application process, the partners get in a disagreement and the thing can get canceled. But probably the biggest thing would be undisclosed things. I've seen some people where they provided, for example, a TransUnion credit report, and for some reason the TransUnion was miraculously clean and everything ugly in the world was on Experian, and we went to banks that pulled Experian, and that got in the way. But generally, if you're pre-qualified with us, we know what you're going to qualify for, and you're able to get funding quick and easy. I know I mentioned a bunch of downsides, but probably 80, 90% of the time, if you're pre-qualified, you're going to get funding within the range that we anticipated.
I have a question. What if they are not listed on the business?
If it's an existing business that's been around for a long time and they're not listed on the business, that can be a hindrance. There are ways that we can resolve that. And that's going to vary depending on the scenario. Are they in the same state? And can we add them to the articles? That might slow things down a little bit. Sometimes it might be easier to start a new business entity and apply under that than to try to add somebody to a business that's been around for a long time and is clearly established with someone else.
And excuse me, Rhonda, let me add one more thing.
It's not my name.
Rhoda, I apologize. And your party, your UBF party, is a one-trick pony, correct? You can only do it once. Is that correct?
What are you asking? If people can get credit cards multiple times?
So I was under the impression that the Unsecured Business Finance program you can only do one time. Only one and done.
Well, generally the best strategy when you go through the program is to get as much financing as possible right away because it is potentially difficult to go back to the well later on. Of course, you could bring in a new business partner with a new business entity and get more funding that way. So not necessarily one and done forever, but possibly. Now, we've had some people that only wanted to get some portion of the funding that's available to them, and they were able to go to more banks later. But that's more the exception than the rule.
Okay, great. A couple other questions here. Can I refinance the debt with an SBA loan? I want an SBA loan. This is really just to kind of get me started, and then when my business gets older, 2, 3, 4 years old, I want to refinance this debt. Can I refinance the debt with an SBA loan?
Who are you
Mr.
asking?
McCormick, you can start.
Maybe. I think the main thing there is maybe. It's going to depend on how well your business is doing, whether or not they're business cards versus personal cards. Personal cards are going to be a lot more difficult to refinance. Credit cards in themselves are, I believe, a little complicated. Our moderator, Ms. Pflum, knows way more about SBA loans than I do. She might be better to answer this question.
There were 2
I think the answer is maybe, but it's not going to be super easy.
That's a great answer.
First of all, you have to qualify for the SBA loan, which is a hurdle in itself.
Oh.
And refinancing older debt, you might have to justify that all the debt was actually used for the business. If they're business cards in the business name, it's easier to do that, but...
Mr. Sublette, can I refinance it?
I would say it would be no.
Objection, leading the witness.
I
No,
would say
it's
no
personal.
because it is for personal uses, and that's not going to be justified by the SBA lender.
Right. Okay. Let's see here. And the other one, Capital One just had a data breach of 100 million people.
Sweet.
Is this going to put me at risk for identity theft?
Yes. That's the short answer.
Trey?
Who may answer? Who's answer?
Oh, absolutely. I mean, sure. that's not good.
That's the roll of the dice.
So, sorry.
Okay.
I'm going to be a little cynical here, but the reality is you're probably already out there. So are you at more risk now that they found out your information for the 18th time from first it was Target, then it was Experian or Equifax or every single data breach? There's so many your information's out there. You need good credit monitoring. You need to be monitoring your situation. I don't know if this puts you in any more risk than you already were in. The reality is you need to assume that everybody has all your information, and if somebody is really coming after you, they could get you, and you need to be prepared for that. Doesn't mean you shouldn't apply to Capital One, because there's probably 5 other banks that had hacks and they haven't even released it yet. So that's cynical, Tim.
Okay. Got a question from Kimberly Bush. We'll start with you, Trey. It's for you. Can a person with compromised credit, who needs $35,000 to $50,000 for a lawsuit payment,
Oh, this is sunny.
would that be a good fit? Pretend like they maybe have good credit. They have a lawsuit. I don't know.
The first thought is they're probably not in a good situation with the lawsuit, so probably their personal credit's taking a hit. So with the personal term loan program, it has to be a clean profile for the most part with the income. If they have taken a hit, that's when we have to look towards the spouse or a co-signer, someone else to go through the process.
Okay.
I've got questions about that one. Lawsuits. We've heard this question a few different times. One is, I've got this money coming to me from a lawsuit. I want to get financing now in advance. I'm going to pay it back with the lawsuit money later. Sure, that's fine. The compromised credit is going to be a problem. Either program, if you have bad credit, either program is going to be tough. You're going to need a credit partner. You're going to need to convince that credit partner to be comfortable with the idea that you're going to get money later or that your business is going to be able to grow. And if so, that's great. It doesn't matter anything about the lawsuit. Now, with that said, if you had a lawsuit and a judgment and it's on your business, it's going to be difficult to go to a bank and apply for funding with a business that has a judgment on it. The banks are not going to like that. Banks don't like stuff like that. So that is another issue that you're going to need to resolve. If you have a credit partner, you could use another business, but you want to be careful about the rules about using money from one business for another business. So.
Okay, great. And then we have our last question. We like to wrap it up. This is going to be the final question. For our agents out there, they want to know how much can they make. Tim, you can start. What's the commission on this?
A lot. So regular finance agents, it's a standard finance agent, you make 1% of the funding. That's the standard payout. So if you're able to get somebody $100,000 in funding, that's a $1,000 commission. If you're able to bring in 5 clients a month, you can be making $5,000 a month just with this one program. And if you've watched me talk about this before, my first month doing this with no tools, no marketing, no support, and very little training, I was able to sign up 3 clients in my first month. And so it is possible for anybody to do that. Recruiters and our member offices can make even more. Of course, they have more responsibility in the process, but the standard agent payout is 1% of funding.
Mr. Sublette.
Fantastic. So the UBF party, Tim's party, copied my compensation structure.
We were around first.
So
we copy you.
It would be, believe you me, we were here first. Believe me. It comes down to, for the personal term loan program, very same model. If we raise, basically it's 1 point if you're a standard agent of the funding amount. So if we raise someone $120,000 quickly with the personal term loan program, if you're a standard agent, that's a $1,200 commission out to you ASAP. At the recruiter level, it's a 1.5 of the funding amount. And then down the road, if you're more into the member office, a much higher pie. So 1 point for standard, 1.5 for recruiter agents.
Now, if you're one of the smart people that signed up for the real estate masterclass and you get that double commission bonus, and your first deal happens to be unsecured finance or personal term loan as opposed to a real estate deal, then you get 2 points of funding. And I've heard a rumor that there's a new masterclass coming out somewhat related to what we're talking about, where we might also have that benefit again. So if you missed out on that, I hope you're hearing the hint. Soon you may have another chance to get that double. Whoa, the officiant's singing, Trey. You might get another chance at that double commission to turn that $1,000 into $2,000, plus get some awesome training.
Okay,
Plug.
Great. That wraps up our debate for today. If you have any questions after the show, or you are watching us later, feel free to contact us at info@financeagents.com or give a call to your rep. Log into financeagents.com/login and log in, and you'll see your manager's name at the top. Give them a call, ask questions, get engaged, submit deals, and get lots of money. We'll see you next week. Bye, everybody.
I had a closing statement.
Yeah.